All right. Good morning, everyone. We are back. It is Friday morning, and we're doing our Fractional Friday. I got Joseph Cachapalia back. So, morning, Joseph.
Good morning. How's it going?
Good, man. Thanks for doing this. You are kind of, to me, you're the expert for me to learn more about this space of fractional real estate. So, I also put your YouTube channel in the chat. So, anyone tuning in, please go check it out. He does daily content on this fractional real estate space. I'm still trying to get a better understanding of it, better idea of it. But what can you tell us? What are you seeing right now in the fractional real estate space, Joseph?
Well, I don't know that there's been any big news yet, or since the last time we did this. I have, I don't know. I've had a lot of change. I had a little bit of a change of heart about Lofty since where um, they just had so many problems that I really started to move some money off of there. Um, and since then, and that was only a few days ago, that I put out a video explaining like, hey, this is all the problems that I'm having. Um, the CEO actually jumped in their Discord and not in response to me doing this, but just like put out a couple of messages that to me made a big difference. So now I'm sort of like I've been waffling, right? I did buy a little bit on there, but it hasn't been. I'm just not sure. It's kind of a weird spot because that's the first platform I really started on. I just see so much opportunity with it, but there is just recurring issues that I feel like come from. Um, I really think just stem from the fact that it's like a tech platform with no real estate background in there. Um, that's why I hope we really get Matt on here today, like we've been planning, because he comes from the real estate world first, I think, or at least he's got like a deep understanding of that side of his business. So I did try to message him again, so we'll see what happens.
Yeah, so hopefully Matt does jump on, but maybe you can kind of who does Matt work for? What's his company?
Okay, so Matt, his platform is called solveslot.com. I think I've talked about it a little bit on one of our other lives. It is they just did a nice rebranding of it where they're talking, it's like, flipping fractional real estate. Wow, that shouldn't be so hard for me to say. But it is, you're buying a piece of equity in a property. It's not a rental property. It's a property that somebody's going to sell. You have a set profit that you're going to make because you're basically doing what, a forward sale contract. Um, and it is, once that property sells, it's already defined how much you're going to get paid out. And you basically today are just buying whatever that piece of equity is at a discount. Um, it's much more coming from the crypto side of things. When I had to create a new wallet on a chain I had never heard of before, just because I had never heard of it doesn't mean a whole lot because I'm just not a crypto guy. They are quickly moving towards making it easy for us normies to use it. I think I've probably had, I don't know, 3 to 5 of them that have gone through full cycle so far, where I bought them, the property sold in real life, and I got paid. Uh, it's a much different experience than any of the other fractional sites because how much money I make, and what my return is almost entirely based on how quickly that asset sells. Oh, there we go. He's going to do such a better job than me of explaining his platforms. This is fantastic.
Hey guys. Yeah, I'm on the
Hey, Matt, how you
go,
doing?
but yeah,
Morning.
I'm doing great. Thanks for having me on, and yeah, I appreciate Joe for being someone that's followed from the beginning, and we're definitely figuring out how to pick up speed. But what we really think our niche solution is right now for both investors on the platform and investors in real life is being able to provide some of that working capital solution to some of our growing investors who are, buying more and, have an endless flow of good deals, but don't mind trading 20, 25% return on the money to getting that money a little bit faster, maybe to go ahead and finish another project. And then we also see a lot of demand for sub 2 deals because a lot of subject to buyers have a hard time getting a second position. So we're super excited to see a lot of these great 60% LTV deals with like 2% interest rates on the first. Say, hey, I'd really love 30 grand. I don't want to have to sell this property yet. I'm looking to sell it next year. And then we just break that investment down and let investors on the platform access it. So you can kind of think of it like a mini debt equity combination on a raise, right? You're raising some debt, you're raising some equity, but equity is always a higher return. And most, new investors don't ever actually raise equity from investors. They're just, borrowing money. So that's kind of the gist.
Well, morning, Matt. My name is Mark. Thanks for joining on my live stream with Joseph. I'm not sure if you're aware. I don't know if you purposely had your camera off or if you wanted to turn your camera on. I'm not sure if there's a reason, but if you wanted to, yeah, definitely turn your camera on.
I'm actually, yeah. I
Okay.
will next time around between meetings. So
Okay, yeah, no worries. Yeah,
mess
so
up.
I think Joseph. No, yeah, I think Joseph was trying to give a breakdown of your company and whatnot, but I think he mentioned also in the beginning, you are kind of have a real estate background. Is that kind of accurate, or coming from the real estate space also?
Yeah, exactly. I've done wholesaling, flipping, investing. I've owned rentals, all that kind of stuff over the past 8 years now, almost 9. No, sorry, 7 years. Here in Nashville, I bought in some other states too, Texas, New Orleans, and really wanted to figure a way where everyone could invest in what I knew as the best investment, which was like short-term holds, flips, a lot of cosmetic wholesale stuff. So, I wanted to find a way to partner homeowners and investors with, retail investors who are looking to invest capital into deals. So that's what we built.
And one of the things that I think makes Matt's product so different, and why, I really think it has more potential than a lot of the sites, is he was out there in the field doing a specific job in real estate and identified this need and kind of hole in the market and built a product to fill that hole, versus like some of these platforms, you just sort of have somebody who is like, I'm just going to reinvent real estate investing, but they've never, they don't really know what that means, right? But they know, I've got this new technology, let's just slap it on an old industry. So I don't know, I'm really curious. I don't know that I've ever asked you this, Matt. How did you go from doing that day to day? Were you already big in crypto as well, or how did you make that jump?
So I was big into like websites and coding. Big from the perspective of a real estate investor. Like I built my own landing pages and I enjoyed kind of hosting my own server. And I actually found out about the blockchain, the Chia blockchain, through some of the server networks communities. And I realized, so a lot of people go to blockchain so that they can be compliant in a complex regulatory environment. So it's not like I'm a crypto maxi. It's that sufficiently decentralized networks allow us to participate in democratized real estate without having to go through an exchange or deal with, the SEC. Also, from like a grassroots startup perspective, I don't have a couple $1 million to throw around to build, an accredited investor SEC exchange. I'd love to do that, but crypto allows for novel ideas to be bootstrapped faster and with less capital. And so that's kind of where the crypto thing plugs in.
it also seems like it creates like an interesting customer base for you, right? Like I see you do these lives on, or I think they're lives on Twitter, or like the spaces. And it seems, and I think this benefits a lot of the fractional real estate space, but correct me if I'm wrong. It looks like you get a lot of these guys that are like, I just like whatever chain, or I just like the crypto idea in general. And it sort of is this built-in base of customers. Do you see that as being who's mostly buying your stuff right now, or not really?
Yeah, I think right now, obviously, being in crypto is a limiting factor to being able to access better investments. But you also have a lot of people that will learn crypto to have access to better investments. When retail can get 30 to 50% annual returns on something, they'll fix. Also had a ton of people that are fans simply because they love the blockchain we built on. We don't think we'll always be on the blockchain. We'll have other options, but we're very grateful to kind of be in that degen maxi space.
Right. Well, that's one thing. Like when I look at your platform, you have you can buy with different types of wallets, and then you have the option buy with fiat. And it's actually really funny to me to think about like that. The way you've set that up is really coming from like a crypto mindset, but it's trying to create. You have this thing that is like, okay, this is for the normal people, right? But like a lot of us normal people don't think of money as fiat, right? I don't know. That
right.
was
No, exactly.
I was actually talking to somebody, trying to explain to them how they can, buy something on your platform, and they're just like, I don't know how to get stuff in my wallet. I'm like, oh, well, just use the buy with fiat, and they're like, well, I don't have fiat. And I was like, no, that
so
just
funny.
means use real money, or regular money,
Yeah, I see that question coming through. We're on the Chia blockchain, but we actually just integrated with Base Network as well. So you can use MetaMask, Coinbase wallets, and pay through Base Network. We're going to integrate Solana as well. But eventually we think we're going to have just a traditional login experience and carry a money services banking license to where if you don't have a wallet, we can custody your assets for you and kind of take the Coinbase route. Where at first, you custody your assets, but then, like my mom, for example, she's like, I'd love to use your platform, but I'm not going to get a wallet. So for all the people out there that, are in that camp, well, we plan on raising capital and building out a more traditional investment experience as
Matt Harrison, Trade Better 99 has a question for you. It says, Matt, are you blockchaining smart contracts via fiat?
Yeah, so we hook up to the order comes through to Stripe, it processes contracts. And so yeah, it's all automatic, all decentralized. We're not going and manually fill orders, which is nice.
Matt, unfortunately, you're coming in broken up, so hopefully you can give that answer or reply one more time.
Yeah, give me 1 second. In a bad signal area.
Yeah, that came through pretty clear what you just said.
Sorry, Matt. I think you're using Harrison's Coconut Wireless today. Says he had issues on the live stream the other day. You did come.
So no,
broken up.
I'm actually. I should be here now.
Okay.
Yeah.
One more time, maybe.
You should be able to. So yeah, we do use smart contracts. Yeah, for layman's terms, you buy with Stripe and it shows up in your wallet automatically through a series of relays that, and mix Stripe together with the blockchain.
And when we're doing that, we still need a wallet to hold the interest, right?
Correct. Now you can use MetaMask or Coinbase wallet, or I think there's a few others, Rabby, Phantom, some of the most popular ones. So you don't need to go get a Chia wallet. Now there are some cool features if you have a Chia wallet, but if you just have a MetaMask wallet, you can log in directly to the platform and buy with fiat, and it'll show up in your dashboard and in your account usually within 10 or 15 minutes if you're using a debit card. If you're using ACH, it takes the traditional 3 to 5 days of processing to show up.
Oh, interesting. Okay. I did have a question that one of the people in my Discord had asked that I just wanted to throw out there for you. There's been some mention of I can sell these before it's redeemable, like before the property sells in real life. I can sell these interests. Where can I do that, or is that not live yet?
No, yeah. So for example, if you have right now, this feature works with any wallet, but on our site, there's a native dashboard experience with Gobi wallet users. So if you are on the Chia blockchain, it's like an order book. So you can make and take an offer just like you would, in the early stock trading days. So if you want to make an offer for your DAC, your contract, you can simply choose the price that you would want to sell it at and then make that offer, and it will blast it out to the entire network on chain. And if someone sees that as a healthy arbitrage, they can definitely pick that up. So I'll put out a tutorial on how to do that. Something, Joseph, that I think you'd be super interested in as well is we just partnered up with a capital group that we've borrowed money from for years now, and are actually also starting to invite accredited investors to fund the front end of these deals at,
Oh, interesting.
yeah. So our debt structure on that is 2 points on origination, 2 points month one, and then a point after that. In some cases, we will do 2 points in month two, with the goal to recapitalize that cash on the platform to retail, so that investors can be a little bit more liquid than a traditional Reg D fund. Like if you're going to go out and invest your money with a private money lender, it's going to be hard for you to get that money back. But if you invest it through us, first of all, we already have really quick turnarounds. So you're already maximally in the deal, in the paper, for 3 to 4 months. But if it sells out on the platform in 30 days, then you're essentially making 4% on your money in 30 days. And if you can do that over and over and over, now you're talking about 48% annualized returns in a traditional debt style fund.
And so, are you receiving that as the DAC sell out, or do you get paid back once the whole raise is sold, or is it like trickle in as they sell out?
Yeah. So how we've got it structured right now is we've got a joint venture with Revive Capital Partners,
Mm-hmm.
and every Friday we ACH Revive Capital Partners a distribution of whatever's sold out on the platform.
Got
So
it.
we're arbitraging the origination. So we actually have one that we're funding today, and it's kind of why I've been in between meetings, because it's our first that we're doing through this fund, where it's in Smyrna, Tennessee. It's already under contract on the MLS. The guy wanted 30 grand on a 6-month term because he's like, I'm not paying. Well, we did a 12% absolute fee, so 1.12x. He's like, I'm not doing 20% absolute when it's already under contract on the market. So
Right.
we're like, fair enough. He just wants that money to go renovate a quadplex in Detroit, which we also hope to bring to the platform. So he's kind of looking at it as a sort of a bridge or a cross collateralization. So we've got a 12% return baked in and a 3% closing fee. So we've got 15 points that we'll make if he sells it in 5 weeks, which is what he's under contract to sell it for, or if he sells it in 3 months. We then are going to go list that on our platform at 1.08x. Now, I think that people that are intelligent will say, well, making 8% in 45 days is
Right.
pretty good. And then people that are in our fund, for example, maybe they threw in 10 or 15 grand into the front end of this deal, are saying, well, I can get 4 points on the debt. And then if I go invest in the platform as well, which we'd consider kind of like locking in, I can then also get 8% on top of that 4%, which is some pretty incredible returns if they choose to lock in. But if they don't, there's a very good chance that they get recapitalized by retail who's like, I'll take 8% absolute in 6 weeks. So figuring that whole part out and figuring out how much demand was really there, and then trying to explain a novel, investment structure to friends and family has been what we've been focused on right now. But we're super excited that people are actually interested in just the paper and don't even care if it doesn't sell out on the platform. And then we have some really savvy guys who are kind of looking at it like, well, we could invest in both and kind of double dip. So
interesting.
Yeah.
And so, Matt, sometimes I think you're a little too smart for my audience. And I want to just try to re-say what you were just talking about. And you tell me, obviously I'm just want to make sure I have the broad strokes right. Because I think that, I think that sometimes it's a little bit, I think you live in this world so much and you get it so well that you might take some things for granted, as far as like, I really struggle to follow sometimes. So I just want to make sure that I'm getting everything that we just talked about. So you've got your regular product, where this is what we're talking about.
For
We
sure.
buy on Paul's lot. And this is, the homeowner needs some money before they sell. We basically buy a piece of equity at a discount, but we're doing that in little pieces on your website. And so now what you've created is a secondary product, and this is going to be for accredited investors, and they're going to be people who, okay, that homeowner doesn't want to wait for me to buy, to send this money in $100 at a time as DACs are being bought. So there is this now third party in this is going to invest in this fund, and the fund is going to just provide the whole amount to the homeowner up front, and then they'll get paid back as the DACs get paid out or get bought up. Is that accurate?
Yeah, exactly. That's our path to liquidity. In a perfect world, I would want to cut that middleman out. I would want there to be enough of retail investors to where a homeowner could just list their home, or an investor could list their deal and just see how it does. I think that's kind of like the lofty AI approach. But for us, these are, in my opinion, very, very great returns that you're never going to find in a typical debt structure. Because they're equity deals. So you can just charge more, you can make more, you can, charge 25% return on your money, no matter when it sells, no matter how fast you get it back. If you get it back in 3 days, great. If you get it back in 30 days, still great. We can't pass those up. And those kind of people are saying, we need our money right now. If we're going to give you this kind of deal, we expect to be funded in 7 days. And so I think it is a really cool recapitalization strategy. That's kind of why I've been so obsessed with it. Being in real estate, I'm like, this really feels like probably one of the fastest recapitalization, the fastest compounding interest strategies that I can not only offer, investors who trust me, but also retail investors who are trying to get into real estate. And then, our target is just to capture 5% of that kind of spread as an arbitrage. Whatever we can originate it at, we just mark it up 5 points. Retail's still usually carrying 20 to 30% annualized returns, and our debt fund has a lot more purchasing power simply because we're able to use that money over and over.
Yeah, no, I think it's a really smart solution. I do think, if you look at, and I don't know, Lofty is probably not the best example for you to look at now as far as like quick sellouts. I don't know if you're following Mogul at all. They're selling out like $200,000-$300,000 capital raises now, often in 48 hours. I think that I think in the future it's really realistic for you to be able to do that. I think this is a brilliant step in between, right, to get there, because obviously there's not that demand from all of us little investors at the moment. But no, it's a neat idea, and it's one of the things you talked about. It is, and this is one of the things I always want to warn people about, right? Like, it is, uh, you're getting incredible returns, and it's because when you annualize them, I mean, it's a decent return even not, but because of it's just the speed of turning that money over, and you get the full return regardless of how long it takes. One of the things that I always the risk to that really high return is just if you have some hiccup for time, right? Like, if for some reason it took a very long time for that property to sell. Other than that, what do you think? Because I always worry a little bit too much on the platforms that I'm too big of a fan of, that I'm like saying too many nice things. So what do you think, like, the biggest risk to the investors on your platform are?
Yeah, so we do a lot to try to mitigate the risk right now. We definitely want to be a platform where we know we can't have people make money 100% of the time. There will be times where you break even or lose money. But for now, I think the biggest risk is, as you've kind of spoken, not necessarily the deals that are currently there, but the due diligence, the knowledge that you're going in with. Like, I think that there's the risk of FOMO and building habits around investing simply because it's a shiny object or it's novel or it's the next big thing for you, where it may not fit your thesis. And so if you don't really go in with, like, RJ Bates is someone who's in the wholesaling community, big investor, says, like, the hedgehog concept. Like, if you don't define your buys, if you don't go into this saying, I'm not touching something that doesn't fit my buy box, you're going to lose money, just like you would trading. Like, if you're like, well, I missed that last deal that just sold out, so I'm immediately going to buy the next one, that's not a good investment strategy. So I think right now your biggest risk is just forming good rules around why you're buying something or why you're not buying something. And then the second biggest risk that we experience on our end, like what we're trying to mitigate, there's a couple. One, you really have to, in my opinion, look at the investors, because right now we're only receiving investors in, and we have to ask, hey, how much volume are they doing? Is their volume actually sustainable?
Oh no, it looks like we lost him, huh?
Yeah, hopefully he'll bounce back in. But while hopefully he's getting back on, we can go to Marvin. Thanks for picking that up, Joseph. So it looks like Marvin says he's coming in from your channel. He says, "Thank you for translating into boomerese for me. I didn't understand anything Matt was saying." So great breakdown on that part for you, Joseph. Harrison Trade Better 99 says Matt is a great guest. So hopefully Matt will get back on today, and hopefully he'll be willing to jump on at another time also. Hyder does say this sounds like a way to get liquidity if in a tight spot as an owner, and a way to get a return without buying, a release valve for trapped equity. And then maybe quickly, so looks like Steven, I believe, coming in from Joseph's channel, says, Joseph, how risky is this? Please comment. And just quickly, those that are tuning in that maybe weren't sure where Matt was coming from, I did put Slow Slot web page or link to the his page, Matt's page right there. You can go check it out. But yeah, maybe you can comment on what Steven's asking, Joseph.
Yeah. So this it actually makes me uncomfortable because it's hard for me to identify the risk in this strategy. It is. I think he's put it together in a really smart way, um, and so because you're not, it doesn't matter what the property sells for in the future. You're upfront. They've done an appraisal and they do like an after repair value appraisal, and you're getting paid based on that value, regardless of if they bring the property to the platform and don't sell it. Like, don't sell it for that price, right? Like, you've bought your deck, they sell the property in real life, they lose money as long as there's enough equity left in there to pay the DAC investors. You paid what you get paid, uh, um, regardless of how the deal actually went. So you don't really have this business plan risk in that sense. He's doing a relatively conservative total cost. So like, you can't sell, when they look at your total value, you can't sell 100% of your equity. You're limited, I believe, right now to 80% of that value. Now it is 80%. Oh, okay, great. Matt's back, it looks like.
Yeah.
But so, so somebody had asked Matt, well, what is this risky? And I was trying to describe, one of the things that does make me worry is when I can't find the biggest risk point. It's kind of like when you're the thing about when you're a poker player at the table, if you can't spot the sucker, then you are the sucker. And I have a hard time because it's a great return. It's hard to put my finger on what the biggest risks are because of, you are using a relatively conservative, total loan to, when you are doing that loan to value, is that the loan to, it's your expected sale value, right? Not your current value.
We have an as-is value as our 80%. We haven't used an ARV as an 80% cap on a property that wasn't already there. Like, for example, Jenkins was sufficiently finished enough after that appraisal to me, for me to feel comfortable to, make sure that people understood that was still at that 80% value cap.
Okay.
I will make it clear if there's no given it, what are we actually getting into here?
Right.
Is it like, for example, we have a deal coming that is a quadplex in Detroit that they're buying at 220. They're pretty much using 40K as gap funding. They're going to rent it out for 4,500. The ARV appraisal came in 390. Yeah. So really solid numbers from the perspective of, it seems like this guy's got a great deal. Value is a lot closer, almost at what you're investing, if not slightly over. So we really have to make sure people understand, like, that one, for example, is a riskier investment. I think, we're kind of through the honeymoon phase on our platform where our early investors really did get some of the best deals that, can be seen. The risks for those early investors were, this platform's new. They have low pedigree, low, history online. They're on a novel blockchain. Those are the risks that people experience. The reason that there weren't a ton of risks in the product is because if we also provided risky product, we were dead in the water. So now that we're starting to build a little bit more trust, I think we're also going to see a bit more optionality, and you're going to be able to make a little bit more risky investments, and competition will be there, and you'll probably see better deals sell out faster. But yeah, that's kind of a good scope of risk.
So Matt, I don't know if you heard when you kind of bounced off shortly. Some of the comments were that Matt is a great guest. I'm definitely going to check this out. So hopefully, Matt, we can get you back on at a later date also with some more information. But Hyder, All Nighter Hyder does have a question. He says, "Is there a tiered kind of payback setup like tranches? Bond holders get paid before equity holders kind of scenario?"
Well, it's a first and second positions, right? So everyone gets paid back together. Um, if you buy on the platform, you are entering the position at the time that a debt fund is exiting. So even though we're originating equity, we are raising on debt. So we are paying that homeowner with unsecured debt through a fund that has partnered with us to be able to do that. They don't get the benefits of the equity deal. We're just giving them a guaranteed return based on the deal that we're originating. And that deal is something that you get access to, and we just pay them back as you get access to it. So there's no, everyone gets paid back when the deal sells, no matter whether they're still in on the debt side or they've been paid out on the equity side, if that makes sense.
I think it does. I want to add one thing that maybe is where some of the question is coming from too, though, is that okay? Matt described exactly
Yeah.
how his product works, but it's also that product is very often sitting behind a first mortgage that already exists on the property, and so when that
Yes.
property sells, well, hopefully it's obvious, but that first mortgage is going to get they're going to get paid back first, and then the holders of the DAX will get paid back. And I think the question probably came from me when you were not when you were disconnected. I was trying to describe what I thought the biggest risk is, and it is just
Yep.
that, right?
Loan to
Exactly.
value.
So
Yeah, I 100% agree. Like you have to look at this and say, if this market dips 20%, am I made whole? Right? We can do our best to deny a sale, deny a
right,
short sale, say no, you must pay us back fully. But if the market does have some cataclysmic, reaction, which I hope we're done with that. Personally, being in the field for as long as I've been in the field, I've seen markets go down 30%. I own property in markets that have gone down 30%. For example, I had a property that was worth $330,000 on an appraisal last year, and now I'm fighting with a lender on a $244,000 appraisal. Mainly due to HOA assessments going up. But there's all sorts of risks in the market. That's why you get better returns, and that's why this isn't a security instrument. We're not guaranteeing you returns. We're letting you do the math. We've baked in what we call an exchange rate, like a 1.2x or a 1.15x, which is where people are drawing these, oh, well, this is a 15 to 20% absolute return if the market doesn't change. And if the market does change, it's going to have to change by 15 to 20% for me to lose money. So 80% loan to value, your principal is safe up to a 15% actual market value change, or this guy literally not being able to sell the property at the appraised value, which at which point we would, foreclose and see what the highest bidder actually would pay. But we haven't experienced it yet. There are chances that, investors can't be completely made whole. We are verging, $500,000. I would guess closer to $350,000 paid back to investors. Every investor is early in the business, but so far no one's lost money, and we don't expect anyone to lose money. Another risk is obviously just your time in the deal, betting that you're going to get your money back faster and then it taking longer for you to get your money back. I think that's kind of a personal risk. How long are you actually willing to be stuck in the deal? That's also something to take into consideration. If you're like, I need this money in 2 to 3 months, and the property sits and now it's 6-7 months, you can try listing it on the secondary market, but at that point you may actually lose money because your just time in the deal doesn't make sense, and you have to get out. Hey guys, I am walking into another meeting, but I think I'll have more time in the next couple of weeks to do like a longer hour on camera. But I do appreciate you guys for having me on, and look forward to doing this again.
Yeah, thanks, Matt.
No, thanks, Matt. Definitely. Yeah, I think a lot of people got great information out of this. So yeah, we'll connect and then we'll get you back on again soon.
Okay. Yeah, that sounds great. I really appreciate it, and I will talk to you guys soon.
Okay.
Great.
Thanks,
Talk
Matt.
later.
Have a great weekend.
Yep. You have a great day. You too.
All right. Yeah. So Trade Better 99 does have a great comment in the chat. I think that's he says this feels like the first tangible step for blockchain real estate. Too bad. Yeah. Are there any worries about coin volatility when calculating value? Shoot. We can
I
say
think
that.
I think that's an interesting question because at least early on the platform, they were like you would basically pick what it was denominated in. Um, but I don't think that's the case at this point. I think that you are just getting your cash value for it. So when I've got the ones I've gotten paid out, I get paid out in a stable coin, right? It's a USDC. Now I guess even though it's a so stable coins are supposed to just one for one track the dollar. Even though it's on the Chia blockchain, what I'm getting paid is like, oh, I don't even know. It's like WUSDC USB or something like that, which I think the W just means it's wrapped. I don't really, I mean, you can tell I'm just not a crypto guy at all, but I don't believe that there is. I think, at least not to the extent past, um, the risk that you take if you have stable coins, which at least in my experience, it does seem, the ones that I've owned do just track the dollar. Now, and I honestly don't know the risk. Like, is it possible that breaks? Right? I mean, like a long time ago, we used to think money market funds would always track the dollar, and at some point in time, they broke. So I guess there is some risk there, but it's not as if like, okay, Chi is fluctuating, so my return is going to fluctuate. I don't think that we have that risk. It doesn't seem to be the case. And it is too bad Matt had to go early. Because I think it's something that we should remember to ask him next time too. But as far as I understand it, no.
Yeah, we'll definitely get him back on. If anyone is still here listening to the live stream, maybe put in the chat or comment who would you like Joseph and us to try to get on next time, or who do you see bringing on possibly next time for the Fractional Friday, Joseph?
Yeah, I've thought about a couple different things. One of them, we have a lot of people that have become active in the Discord that I set up. That's just like a generic fractional real estate Discord. And there's a lot of people like me that are just like in there every day, looking at all different platforms, investing and stuff. And so I was thinking about just trying to find somebody who is just another avid investor, but who maybe is not out there talking about it every day, and see if I can get one of them to come on. Because it is, I think that the more like, yeah, I just live in this world, and talking to Matt, you can see this from him too. Is you just sort of you start to get lost in like what everybody is just automatically going to know and understand and what they're not, right? And so, like for example, even just like mentioning a few of the platforms, like there's a lot of context that I think about when I think about them, but obviously, most people in real estate in general um, don't know that yet, right? Like they don't know the difference between mogul and lofty, and like how one of them is selling out deals in 2 days right now, and the other one, it might take 2 months or 2 years to actually sell out if they do. um but so that's what I was thinking, maybe trying to get an investor who's just like really really in the space, but not necessarily from one of the I really like getting people that like are from one of the platforms. One, some of them don't like me at this point, because I'm just trying to be completely honest. But so that's one thought. The other is too, I know there's a lot of ways, and like Sol's Lot's a good example, but there's ways for Lofty as well. There's a lot of ways for just real world real estate investors to tap into these products and like be basically a counterparty that I think is interesting. So trying to find someone who's doing that well is maybe my next goal, right? Like people that are bringing properties onto some of these platforms, or bringing it'd be really interesting to find someone who's used Sol's Lot to raise money. Obviously there's only been a few of those so far, so I don't know that I will be able to grab one. um but then too, like, I'm always open to anybody that we meet in this space. I feel like because it's a growing space and like everybody's trying to get their word out about it, like I feel like we could probably get just about anyone to come talk on here.
Oh yeah. If you want to know why, like Joseph was saying, maybe people don't like him right now, go check out Joseph's YouTube channel. Like he says, he's just trying to put out information and content about this space, and he's doing more daily content. So definitely go check out his YouTube channel in the chat and go subscribe there. But Harrison does have a question. He says, going back to Lofty, Joe, what did the CEO say to make you want to stay?
Yeah, so it was just his position on a couple of issues. So one of the things that happened on Lofty that made me really nervous is we have a property in, the properties are owned in DAOs, right? The DAO is the LLC. It's the specific type of LLC it is. Um, Up until now, every time I've been in one, once we sold that property, you would just redeem, you would just get cash out, right? Like, okay, the property sells and you get cash. And so that had been a big part of my strategy on the platform is, okay, buy these DAOs at a discounted rate, vote to sell them in real life. When it sells, get paid back. But they are run as, member managed LLCs. And so there was a vote that was being proposed that was, and it's actually happened in multiple of the DAOs, but it was one that I had one of the bigger investments I have on the platform, where they basically wanted to say, okay, we're going to sell this, but we're going to take the cash and invest in one of the other deals on the platform. This wasn't something I had any interest in at all. And it looked like, because I had seen it already happen in one of the other DAOs, that this was just perfectly possible. And so to me, that was just a risk that I think I'm not willing to take, right? I'm not going to make it so that, if my goal is a path to cash and then everybody else wants to just reinvest in some other deal that I haven't had, I haven't done any due diligence in, you're just kind of stuck getting dragged along with that. But so that was really for me the last straw on that platform. I was like, oh, now I can't even execute a strategy that I had identified as really the only low risk strategy on there at the moment. But he had come out a couple of days later, and because this was a big discussion with lots of people, and he just said, no, if the property sells, you're just getting redeemed. We're not letting people do these moves into other things anymore. I thought that was, I think it was really common sense. It was kind of funny because, I don't, I end up disagreeing with him on lots of stuff, but I thought, I wanted to give him credit there. It's like, absolute, it just is the most common sense move. And it was, so it changed my mind a little bit. It wasn't enough that I'm like excited about the platform again, but it was enough that like, okay, that to me just compounded your risk so much that I just wasn't willing to stick around. So yeah, that was and I don't know, it's sort of a policy change, but it was just more making it clear what you could and couldn't do, which is what I think we're lacking the most on that platform. I mean, we don't really have these big, these real guardrails. So
Harrison Trade Better 99 says you should get the Lofty CEO on this live and talk to regular real estate people.
just not sure that he is. I could ask him. I don't. I feel like I criticize that platform the most. I will see. I'll ask him. I'll see if he wants to. I mean, he's a nice guy. Like I like him as a person. He just does. He's not a real estate guy, and he has a very. Part of the thing that I've just really come to realize is he has a vision for the platform that just isn't necessarily good for investors, right? Like he wants to just see every piece of real estate in the world on the platform. And so then that means I have to spend an inordinate amount of time looking for deals on there, just like I do when I buy deals in real life, right? So But that's his vision and it's his baby, and so it makes it difficult to live in that world as someone who's primarily in this space to make money. So
Yeah, to your point earlier, I definitely could tell Matt has a real estate background. And like you're saying, he brings that real estate
yep.
kind of mindset or background to his platform. And for those of you that are tuning in recently, like I see Jasic tuning in, so morning, Charles McCune tuning in. We did have CEO Matt from Solid Slot on here earlier, so I did put their webpage here. So go check that out. He had to jump onto another meeting, but we'll try and get him back on again. But Roger, coming in from Joseph Channel, says, "Glad to see that they won't hijack our cash after selling properties in real life on Lofty."
Right. I mean it was exactly my concern, right? Like it just you if they could do that, it made it an incredibly scary platform for for the short time that I thought, oh, that's just going to keep happening. And as far as I know, there's really only one that they successfully did it, where they sold it and then they're just holding that cash. They just moved it into some other DAO. Um, but yeah, knowing that that's not that taking that risk off the table, yeah, it made me a lot less uncomfortable. I don't want to say it made me more comfortable, but I'm a lot less uncomfortable now. So yeah, I did. I did a couple of videos about like, oh, I'm liquidating my portfolio, like I'm getting off of there, because it really, that's one of the things with all of these new setups. Like, I'm very focused on trying to identify what the risks are, and that was just one I hadn't even considered. Like, it never even entered my mind that maybe we'd buy fractional real estate, we'd sell that real estate, but not get cash like that. Uh, I don't know. So that's one of those unknown risks, right? Like the ones that you don't even know you don't know. So
Yeah. So everyone else that is still here, a lot of you are in school, and Joseph's also in the school community. I mentioned to him a few weeks ago if maybe he had any thoughts of kind of doing, how we do have accountability groups in the school community. If people had any interest, if Joseph maybe started a fractional real estate kind of accountability group or more information. So if those of you that are still here, if you think that's a good idea, maybe comment and then say you have some interest in tuning into those. But any more thoughts on that, Joseph? Did you think
yeah,
about that
no,
a little?
I never did. I didn't reach out to Zuber about it or anything, but I would definitely do it if there's an interest. I do, a weekly Zoom call, or even if people wanted to do it a little less often, however they felt like doing it. Um, it's certainly a product that lends itself to actual weekly goals that are like really it's very easy for me to say I'm going to do due diligence on the 4 properties on Mogul this week, right? Like, I mean, it's really simple. Like, I'm doing the 52-week challenge videos where I'm like just trying to buy something every single week. That could be a goal, but also just doing a certain, due diligence on a certain number of deals each week. Like, yeah, I mean, I'd be really happy to do that if people would, find some value in it. We just do it on Zoom. I've got, and we don't have to post it if people, I know you mentioned some people don't like that those were posted or had been in some of them. But yeah, absolutely, I would do it. So if people think that's something they want to do, you can message me in school if you're in school, or yeah, put a message on here or however you want to talk about it.
Got my guy Joel Farrow stopping by. There's his YouTube channel, Lending for Entrepreneurs. Yeah, so go subscribe to Joel's channel, go check him out. And Joseph, maybe quickly wrap us up then with what is this 52-week challenge or something you're doing on your channel? What is that all
Oh,
about?
okay. Yeah, so that's just I started doing that earlier this year. In real estate, I think the biggest impediment for people, they get this analysis paralysis, right? They spend a lot of time looking at deals and never actually pull the trigger. One, that's why I think fractional real estate's really good for people, because when you pull the trigger, it's a little tiny trigger, right? You can do it $50, $10, $250 at a time. But so yeah, I just weekly, and I'm mostly doing this through my DMs, although I do have a slot on my channel on my Discord, but people don't ever seem to post there. They just like to DM me, and that's fine. But so every week I just put out, okay, so the 52-week challenge is, okay, it's your first year in fractional real estate, buy one fraction every single week. and whether that's a $10 fraction or like, because if you can have really small pieces, if you were, say, going to be on ground floor where you can buy minimum $10, you could accomplish this with a $520 commitment, right? It's like, it's not a very big commitment, or you can say it's going to be something bigger than that. But so I think it lends itself really well to just making sure you're not spending all this time looking at deals and never buying anything. Um, and so because of that, then I put out every single week what I bought that week, and then people share with me what they're buying, to just sort of, it is in a way thought of it as an accountability group when I got started. But for whatever reason, people don't like what they bought to be public. They all like to like share it with me separately. So it's been interesting. I thought there'd be more, but I think that to a certain extent, people don't want other people in their deals, like if it's on Lofty, because it affects the prices, right? Because it's a market and stuff gets bid up. But I don't really understand why on some of the other platforms people would just want to keep it a secret, but some of them do, and that's, I think that especially the people that come from the crypto world, for some reason, have a stronger desire for anonymity than all of us real estate people. We're just like out there. Um, I was actually talking to a young guy about this. He wanted to come on my channel but stay anonymous. I was like, no, we're not. I'm not doing it. Because like in real estate, this is such a reputation business, right? Like you're doing big deals with people. You always ask about, hey, have you ever worked with this guy? It's such a reputation business. So the idea of hiding your who you are is just, it's so counterintuitive to me. So I don't know, but it is definitely in that space. I know you've mentioned it before too.
Yeah, that's why I was kind of chuckling. I mean, that's definitely the struggle, and I don't see Proof Oak stopping by today, but he's always hoping that I get more crypto space Bitcoin people on. But it's difficult, like you mentioned. A lot of them want to have their anonymity and not kind of be on camera and whatnot. But that's why I'm always grateful for Coach Nick Massey, stopping by. He's kind of my Bitcoin guy now, and he's been on Zuber's channel recently. He's trying to grow his YouTube channel, Lead Pray Hodl. So go check him out. But he's kind of a regular now, and I'm definitely glad that he's willing to do that. But yeah, so everyone go check out Joe